Welcome, dear traders. Yesterday's US economic reports increased volatility and even broke Wall Street's long-winning streak. Despite their secondary nature, the housing report still managed to strongly influence the stock market. Several weak indicators have raised concerns that the US economy may be sliding into recession. Today, markets will assess key data on the US GDP, unemployment and inflation for November. This influx of information is expected to refine market predictions. In addition, yesterday's data revealed an uptick in existing home sales, intensifying investor concerns. And this development triggered a sharp increase in stock selling and profit taking. The US dollar even briefly touched the resistance level of 102.5 during the Asian trading session. With the market still elevating the Federal Reserve's interest rate strategy, caution prevails ahead of these significant statistical releases. Consequently, the US dollar index is likely to hover around its 4-month lows. Early on Thursday, the greenback was trading within a narrow range between 102.20 and 102.40. Despite the current high volatility, the technical analysis suggests that the US dollar may remain under bearish pressure. It's anticipated to move towards the support level of 101.87. Should there be a rally, bulls might attempt to breach the 102.60 mark once again. Notably, the yield on the 2-year Treasury note, influenced by anticipated Federal Reserve rate hikes, continues to be high, hovering at approximately 4.37% today. In contrast, the yield on a 10-year Treasuries is comparatively lower and currently at 5-month lows. Additionally, global non-government bond yields experienced a significant decrease yesterday, prompted by a notable decline in UK inflation. At the same time, the US dollar saw an uptick against the British pound, partly offsetting its recent losses in the broader index. Today, the Japanese yen emerged as the standout performer among the US dollar's 6 major counterparts. A drop in Treasury yields and the cautious tone in the market early on Thursday contributed to the yen's ascent to 142.90. Crucially, the yen's rise was bolstered by the Japanese government's optimistic outlook on the nation's economy, and this positive sentiment, combined with the overnight declines on Wall Street, spurred a rise in a safe haven interest, making the yen a more attractive option for investors. With the US dollar's moderate decline, it's aiding in stabilizing the dollar-yen pair within the 142.80 and 143.60 range. From a technical standpoint, should the pair break below the 143 mark, it could potentially drop to the support level of 142.5. However, the dollar-yen pair may also soar to the key resistance levels of 143.5 and 144. External negative factors were offset by domestic data for the antibody currencies in Asian trading. Risk sentiment and rising commodity prices supported the Australian currency. As a result, the Aussie plunged overnight along with the US stock indexes and opened Thursday at the lower boundary of its 0.6720 and 0.6750 range. Despite the weakness in the greenback, the Aussie dollar pair failed to recover to yesterday's levels, as it remained under pressure from falling oil prices. Under the influence of all of the above factors, the pair consolidated moderately near the 0.6750 level during the Asian session, and the technical resistance and support levels are at a point 68.10 and point 67.30 respectively. Today, the New Zealand dollar shows a contrasting trend. It opened the Asian trading session at its highest level, then fluctuated within the daily range of a 0.6230 and 0.6260. By the start of the European session, the currency stabilized near the 0.6250 mark. This divergent behavior from its regional counterparts can be attributed to differing expectations from their respective central banks. The Reserve Bank of Australia appears committed to maintaining a hawkish stance, while the Reserve Bank of New Zealand is less decisive in its approach. The latter's governor, Adrian Orr, noted on Wednesday that recent GDP data unexpectedly indicated an economic contraction, and this could lead to the New Zealand Central Bank towards a more dovish rate decision of the future. Despite this, the New Zealand dollar's chart still shows bullish momentum, suggesting potential growth towards the resistance area of a 0.63 and possibly higher. However, the currency's trajectory will continue to be influenced by fluctuations in the US dollar rate. As such, the Kiwi may test a new support level of a 0.6180 today. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online soon.